Good morning, traders. Welcome to the latest episode of Talking Ball. It's the 15th of May. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, mate.
All good?
Yeah, all good here. All good in the hood.
Superb. So, start of a brand new week. Let's get into it with the latest headlines, then we'll move on to the charts and see how things are shaping up for the week ahead. So, US consumer confidence slides. According to the provisional data for May, the University of Michigan Consumer Confidence Index dipped to 57.7 from 63.5 in the previous month, and this was significantly below the consensus forecast of 63. Both figures were worse than expected that we saw on Friday, and the overall index was at the lowest level since November 2022. We've seen some mixed messages from the Bank of England's chief economist, Pill, who stated that the bank is not intending to give a directional bias on future rate decisions. He added that there may be more work to do in bringing inflation down, but the bank is seeing evidence that the economy is moving into a more favourable direction on the inflation outlook. In this context, he added that the outlook would be different if there is evidence that inflation pressures are easing. At this stage, the market considers that the most likely outcome is for a further interest rate increase at the June meeting. We've seen mixed rhetoric also from the ECB over the weekend. They stated that interest rates were in their final stretch, but council member Casimir stated that the bank may continue with rate hikes for longer than expected. We've seen continued slide in Chinese loan growth. The Treasury Secretary Janet Yellen stated that there is still uncertainty whether the Treasury will run out of cash. That should be with regards to the debt ceiling, not Chinese loan growth. Is a wrong headline in there. So the debt ceiling is pretty much front and center at the moment of being a concern. There is still uncertainty when the Treasury will run out of cash, but repeated that it could be as early as June the 1st. So only 16 days or so until that becomes an issue. So it's going to continue to ramp up as we get closer to that date. Treasuries overall lost ground and higher yields were helped by a stronger dollar, as there was also demand there. And with the dollar, that hit a 5-week high. The dollar maintained a firm tone, especially with global growth doubts, and the currency index posted its highest level since the second week of April 2023. The New York Empire data is due out today. That will be around 1:30. There was a strong rebound in the index last month, which was not matched by other regional indices. This month's data will therefore be closely watched. Okay, let's get into the charts. Steve, do you want to take a quick look through cryptocurrency, see how that's shaping up for the week ahead?
Yeah, just thinking, Joe, if we don't get sort of like the budget or for more
Debt
cash,
ceiling.
then yeah, debt
They
ceiling
do all
raised.
the
Then
time. Happens every
yeah,
couple of years, don't they? Just kick it down the road.
yeah, but maybe they're going to introduce cryptocurrency instead.
Ooh,
Hey,
what's the chart suggesting?
the chart's probably suggesting. Well, it's basically what I wanted to do was look at this weekly chart. We've got this potential inverse head and shoulders, which I've sort of like we've talked about for a while now, and the neckline for this was 25,400. And I did say on Friday we potentially although we're forming a bit of a short-term top on the charts on the shorter-term time frames. The weekly chart, I said potentially could come back, retest that neckline, and project higher. That could be what we're waiting for. Maybe it's happening because last week's candle very much did that, got very close to the neckline, stalled just in front of it, about 400 points in front of it. Let me, oh, I'm not sharing, am I? Here we go. Stalled just in front of it, as we see here, this candle here, and projected higher, back up to 27,500 as we're speaking now. So here's the shorter term chart, the daily chart. We can see again we've broken through the neckline to the downside, but this very strong bullish hammer from Friday has basically allowed a retest of the break of the neckline, which we're having now. So I think it's D-Day, either today or tomorrow, and the next break could be quite significant. If we do manage to break back above probably about 30,000 on the Bitcoin, then I think potentially we're in for a ride, maybe up to as high as 35.5. That's the measured move target for that this inverse head and shoulders here. You can see where it's bounced off that support there. However, if we do stall around these levels and break back down lower, because we are below the 4-hour Ichimoku cloud, so still have a lot of work to do. 28,300 would probably be the next significant area of resistance. Then it's a bit of a different story. Ethereum, similar sort of price action, really. Little bit of a bottom formed on Friday. This is a short-term 4-hour chart. Still got a bit of work to do. Resistance coming in around about the 1900 level, trading at 1832, and Ripple trading at 42.70 cents, and resistance just above, and yeah, been quite sideways really since last Monday, in fact. So let's take a look at commodities. Interesting that gold is pushing towards the obviously sort of like having a really nice bounce, quite an aggressive bounce. Looks like to be trying desperately to form a bit of a bottom in there. Still got a bit of work to do on the upside, but the short-term charts, the 4-hour and the 1-hour, are in positive trend territory above the cloud. Joe's going to dive into a little bit more detail, but it's a very, very strong week last week, bouncing off that support line there that we've formed from previous levels, and a really strong bullish, almost a bullish outside candle, but a very, very strong close to the week last week. And yeah, potential more upside. So normally that would impact negatively on the commodity currencies which are priced in dollars, specifically gold. This is what was my gun to head from Friday, which didn't play out. Looked good for a long while, but got stopped in the end. On the weekly chart, we've formed some shooting star candles here. So I'm still sort of like looking at this from a negative perspective. Posted a lower high at 2067. Obviously, you got the 2075 all-time high from August 20, and March 22, the 2070 level. So another swing high, and really, although the spike highs that we saw on these previous 2 weeks were reversed pretty sharply, it seemed to be a little bit more pressured this time. But that dollar strength should impact negatively on gold. But we'll have to wait and see. Price action still dominated by Thursday, the 4th of May's high, the 2067, and we haven't been able to get back above there. Support coming in around about the 2000 level. So this could be my prime one for gun to head, because if you look at the 4-hour charts as well, we're approaching that cloud resistance. We've also got a downward trending resistance line, which I think is quite key. That comes in around about 2033 today, and the hourly chart also just running into a bit of resistance on that cloud. So could be primed to maybe have a little bit of a reversal at the start of the week. Let's see. Looking at crude oil, let's look at what's going on the weekly chart. Another negative week last week. That's 4 we've had now. Obviously, we had an overnight reaction on the week of Monday, the 1st of May, and when we got down to that sort of like them lows, just spiked lower and reacted higher. That was after the Fed, I think. From a daily perspective, yeah, looks like hanging man candles have sort of like negated any chance of a reaction higher when we ran into resistance, which was formed by the previous swing lows, 73.83, and we started to reverse lower. So under pressure on the crude oil 4-hour chart and the 1-hour chart, both below the Ichimoku cloud. This downward trending resistance line could maybe redraw that to somewhere like that. That's 4 or 5 nice touch points, and yeah, resistance from that coming in at 72.45. Natural gas, it's bounced a little bit higher actually, so reacting last week's candle, quite a nice inside harami, bullish inside harami, reacted nicely off that 206 level. There we see the support there. Little bit of upside potential would be targeting around about the 256 level on natural gas. That's about it on there. If there's no other requests for commodities, Joe can go through the FX and then I can dive into a couple of indices after.
Sure. Okay. So a couple of requests have come in for FX. So we're going to be looking at Euro Yen and CAD Yen. But prior to that, we're going to take a look at the US dollar. Steve's already touched upon it on the weekly chart, looking pretty interesting indeed. If we just bring this up, we can see last week there was a very strong bullish candle that was posted on the weekly, a bullish outside candle, a bullish engulfing candle, close to these previous lows that we'd hit in January and also in April. So prices potentially on the move higher here. Take a look at the daily. We can see that prices were trapped within a very tight range for decent period of time. We can see it there between these blue lines. Prices continue to chop between it. But on Friday, we saw a big break to the upside through that 102.23 level, and then prices rallied pretty close to this next level of resistance, which was a previous gap that was also filled, but may act as resistance again. That's at 102.83. So if we start to break through that, then the chances are we may have formed a short-term bottom on the US dollar, and we may continue to see higher prices. So how's that impacting some of the other majors? Well, Euro US dollar has been trading in a bullish channel for a significant period of time, but on Friday we saw a close below the lower end of that channel, which is pretty negative. So prices are still below that at the moment. We are higher today, so it may be that we get some sort of retest into maybe 109.40 to 109.01. So in that range there, maybe we will see potentially some selling interest if we are to believe this move, because if it is going to play out technically, ideally this resistance now is going to be the reverse side of this broken channel, and we'll continue to see the sellers feast on the selling opportunity there that may present itself. It may be that the price continues to trade within a range. We can see here we've got resistance around 110.32 and support in place at 105.31. So it may be that prices do go on a corrective move lower, particularly if we do get further strength in the US dollar index. Taking a look at cable, we can see that's on the front foot today, but has seen a couple of nasty days of selling. So prices stalled into these levels here. That was at 126.66. We saw a number of doji or indecision type candles or a shooting star that formed, and prices have continued to move to the downside. So we can get rid of that as a level of support because it hasn't held. So the next level of support is these previous swing lows, which comes in around 123.48. So it's looking a little bit under pressure. Clearly, the underlying trend remains bullish still, but we do need to keep this in mind. I don't know if there's any trend line we can draw. Pretty difficult with anything linked to sterling, just because we had this nasty collapse back in September. But if we connect these 2 points here, we can see that actually there was a close below the trend line there on sterling US dollar. Okay, let's just take a quick look at some of the other dollar markets. So first up, dollar yen. That continues to be quite choppy, but obviously had a pretty good day in the last couple of sessions. Still got to challenge this major resistance at 137.91. And until we can break through there, we may continue to see more sideways and choppy price action. Dollar Swiss attempting to kind of form some sort of rounded bottom in the short term, but overall this still looks negative following the break of that major support there at 90.84. So any rallies are likely to be limited into this region here. Dollar CAD, been a nice bounce from this sequence of higher lows. Really nice move to the upside. Again, resistance faced not too far away at 136.47. And if we take a quick look at these commodity indices against the US dollar, we can see Aussie versus US dollar rallied into significant resistance at 67.93. Looked as though it may be attempting to break through that, but then we got this big rejection, and prices continue to trade within a range, lower end of the range at 65.67 to 67.93. So not particularly big range, but looks as though prices are going to continue in that vein for a while yet. And New Zealand dollar, US dollar rallied into previous swing highs that we saw on the 5th of April before posting a pretty swift rejection. Our prices back down into this congestion area down here. So yeah, dollar looks like it's on the front foot for now. So let's look at these requests then. So euro yen is the first one. So first of all, I'm going to look at the daily. So prices were trading within a range. We've got a breakout from the range on the 28th of April. Prices have then corrected lower in what potentially is a flag pattern or a wedge or a pennant, suggesting that there'll be a continuation higher in price. So we can see here that price is consolidated. Today, we've actually seen a breakout through that, but we need to see a close here for it to confirm. So there is still maybe some opportunities to sell into that today if you believe that prices will continue to head lower. But we do need to consider, if we go back further on the charts on the daily, that the overall trend remains pretty bullish here. So therefore, the favourite move, I think, would be for continuation higher. But that doesn't mean there can't be opportunities to trade both ways. So one of the viewers on YouTube has asked, this seems to be hitting a 61.8% fib level on the 4-hour chart, so potential for a short opportunity. Well, let's take a look at that. So this is the 4-hour chart. So if we draw from this previous high here, so this kind of swing high on the 8th, last Monday that we hit that level, we can see if we draw a fib level from that high down to these lows, we're into a 61.8% fib level this morning, and there's been a pretty nasty rejection. So on that basis, and on a standalone chart, I can fully get behind that as an opportunity to sell, targeting a move down to these swing lows. If we look at a longer term fib, so from these highs on the 2nd of May down to these lows that we posted on the 11th of May, we can actually see that 38.2% fib level comes in pretty close at 148.22. So a bit of a confluence there of Fibonacci levels, suggesting that maybe we will see a move to the downside. But we do need to consider this longer term setup, and even potentially to confuse things further in the short term, there may be some sort of head and shoulders forming here on euro yen. Maybe this being the left shoulder, this being the head, maybe this being the right shoulder. So that would suggest that we've actually seen the completion of the head and shoulders. And now what we're getting now is a retest of the neckline into those fib levels. So from a short-term basis, that actually looks like a pretty nice setup, but do be aware of that longer-term setup on the charts. Okay, CAD yen, let's take a look at that. So go to the longer term charts first of all. So we've touched upon this a few times in the last couple of weeks. Big resistance here between 101.41 to 101.65. We can see here a large top pattern form. Prices broke down on the 1st of December, and since then they've been trapped below this resistance level. We've seen a couple of attempts at trying to break through, and each one so far has failed. So while that continues to be the case, for me, the bias probably lies on the downside here. But what we're looking for some sort of confirmation, well, prices seem to be forming some sort of short-term triangle formation here. So a break either way of that is likely to dictate direction. So about these, they're extending to the right. Let's just clean this up a little bit to make it hopefully easier to see. So yeah, something like that, maybe some sort of triangle or wedge formation, a break to the upside and a breakout through these resistance levels as well is likely to trigger further gains. However, a breakdown is likely to trigger further range-bound price action towards the lower end, which comes in at 94.63. So maybe a little bit more confirmation needed there, but my bias probably would be on the downside given the significance of this resistance area here. Okay, let's leave that there. And Steve, you can look at some indices. There's a request for DAX again from Sanadid.
Yeah, thanks, Joe. Going to take a look at, start with the weekly chart, really. The weekly chart, as I said last week, is it forming a bit of a diamond formation? I think this this really sort of extraordinary week we had on the 1st of May onwards had a huge range, but we still closed at the highs. Last week's hangman candle engulfed that body, And again, it's another attempt to the downside, failure, and then rally higher. So very sort of confusing or mixed on the weekly chart. And then when you look at the daily chart, I mean, we are at quite heady heights as well. So looks like we've just been going sideways in this range. And again, Friday's price action was pretty positive, engulfing the previous day's Thursday's price action, and we've extended higher this morning as well. So looking, short-term charts looking quite positive above the 4-hour candle. So like that, and on the hourly chart, same sort of move higher. Although in the last hour or so, we've rejected from that rally at sort of like previous swing highs. Looks like we formed a lower high on here. So it's pretty mixed bag. It feels overextended to the top side on the longer term chart, but it's still up here. So it is a question of timing. I'd feel a little bit more comfortable, to be honest, selling this if we broke lower below these cloud levels. And also, if we look at the daily chart, really wouldn't sort of consider selling it unless we did break maybe something like 15,650 around that area. And a close below there would be even better. That would form a double top formation on the daily chart. Otherwise, you've got to sort of like stick with it at the moment on the long side. Yeah, that's about it in really in terms of the DAX. The US counterparts have had sort of like a really negative week last week. Let's look at the weekly chart, in fact. The continuation lower from the previous week, and it sort of like confirmed the weakness that we saw, but the reaction higher we got from the week of the 1st of May. So under pressure over here on the other side of the Atlantic. Daily chart today, we've seen a little bit of a perkier start to the day, but we've had 5 negative days on the spin. So yeah, support coming in 33,110, and a more major support really around about the 32,900. Nasdaq's performing quite well though, although we had a bearish outside candle on Friday. We've almost recovered all those losses and back up to where we started on Friday morning. So not a lot changed. We've still got some resistance up above coming in around about that 13,723 level. So still a lot of work to do on the upside, but again, this is this forming some sort of topping formation potentially? Bit of a sort of like an ending wedge type of formation, but really needs to sort of like clear below the 12,750 level to confirm that. S&Ps, we've had sort of like 3 or 4 significant tops around the resistance just below the 4,200 level. Trading 60 points below there. Had a nice little bounce from 4,047, and that's where the support would be. I really need a close below there or a close above 4,200 to give us the next little bit of trend that we're desperately searching for. That's about it on the indices. Yeah, so we can move on to gun to head if there's no more requests.
Okay, cool. No more requests. So let's move on to the gun to the head challenge then. So this is where Steve and I pick trade ideas live on the stream. As if we had a gun to our head. We come up with them pretty much on the spot with a few basic rules that we must put in place. We must have stops and targets in all of these ideas. We must have a risk reward ratio better than 2 to 1. These ideas are closed out at 9 p.m. UK time unless the stops or the targets are hit, and we risk 1% of capital per trade, so a maximum of 2% risk of our trading account per day. We're running a live trading account with Owanda, and as things stand, I don't know if Steve can bring up the balance, we're at £2,024. We started off with 2,000, so it's been pretty difficult, to be fair. We've been running this for a long time. Throughout the whole time that we've been doing these streams, we've done 845 episodes now. So over the course of time, we do know that by maintaining this kind of consistency and having this same sort of disciplined approach every day, that it does work and that the balance does grow. But for now, it's been a bit tough for whatever reason. Maybe the markets aren't working too well on technicals or just too choppy. Whatever it may be, it just highlights the markets and trading is very difficult. And we're just trying to showcase that as best we can and hopefully educate people at the same time. So let's get on with some new ideas today, shall we, Steve? So on Friday, we both traded ideas. I think you traded gold. I traded sterling, New Zealand dollar, both of which were stopped out. So don't need to dwell too much on them. Let's look forward and pick some winners today, shall we, Steve?
Yeah, I'm sort of looking at gold again, Joe. The weekly chart last week sort of like dominated by the shooting star the week before and another one last week. So still looking a bit toppy at the close to the all-time highs. So I've got to consider that as well. On the daily chart, again, we've got a little bit of support coming in down below here at 1993. So that'd be like quite a nice target. 2000 psychological level also. For me as well, though, the shorter term charts, the 4-hour charts, we've got this nice downward trending resistance line. Resistance today coming in around about the 2033 level. And the hourly chart also, we've got like resistance coming in at 2022. So I'm going to go with this again on the hourly chart. Going to get short into this rally that we're seeing at the moment and look for a move down. I'll probably target that. Ooh, what time is it? Probably target that 1993 level, somewhere around there, Joe. The stop 2032. Yeah, I mean, I could tighten that stop up a little bit, but I'll have to respect gold. Let's see what we can get on from a trade perspective, because our account is quite small. You can't always get on what you want here. That's risking 0.99% there, but let's move the stop up. Yeah, it's sort of close to that. We're close to the 2%. If I let me get the target all done. I'm going to look for that 1995 level. If we did 2%, two lots rather, we need to either tighten the stop up or look a little bit lower on the target side of things. Trying to get that 2-to-1 risk reward isn't that easy. Here we go. We're risking £17.80 if we get short here with a target of 1993. So I think for that should work for me. So it would have to break above the cloud to get that one going. So yeah, I'm getting short here. Stop is at 2030, targeting a move to 1993.
Best of luck. I'm going to take a look at Euro Sterling today. I really did like actually the Euro Yen idea that we went through for Moch on.
Yeah, that looked good.
I mean, but you know, I don't want to contradict myself too much because the daily just kind of puts me off a little bit following the breakout of that. But on the certainly on the 4-hour, looks quite interesting indeed. So I'm actually going to still stick with Euro, but looking at Euro versus Sterling. And this is the reason why. So let's take a look at the daily. We can see here that prices have been moving sideways for a significant period, but we can see that there's a significant, a trend of lower highs. And we've broken down through support here at 87.21. So that's been pretty fierce support for a period of time, but then we saw a breakdown. Now we've seen a retest and prices appear to be stalling at that retest. So if this is going to work out well from a technical perspective, then ideally we should see the sellers step back in here and potentially drive prices lower. So let's just try and finesse this a bit using the more intraday time frames. So let's actually go with the 4-hour. That maybe looked a bit neater. So we've got these lows in here that are now acting as resistance. And I'm going to sell it at the current level of 87.09. Stop loss at, let's go there, 87.54. What am I going to target on the downside? Go over to the left-hand side to see if there's any levels there that look of interest. So it's going to have to be into these lows in order to get decent risk reward. So let's go at 85.76. And stop loss 87.54. Did you get that, Steve?
Yep.
So that's risk reward ratio about 2.9.
Yeah, 2.93. Yep.
So we can, Steve, he's got that on.
That's it. We're on. There's a stop. £20.15
Okay.
we're risking, targeting 60 quid.
Lovely.
Hopefully we get a couple of winners today, Joe. We'll start to sort of pull away from this 2000 level. I almost feel a bit nervous.
Yeah. Okay, so let's take a look at what's out for the rest of the day and also for the week. We can see that we've got US Empire Manufacturing Index, which is due out at 1:30 UK time. And tomorrow morning, before the markets open in the UK, we've got the UK Labour Market Report. On the 16th, we've got US retail sales. And on the 19th, we've got a Fed Chair Powell speech. So a few bits to keep us interested this week. It seems to be slowing down a little bit after a hectic few weeks of economic data and earnings. So Steve, let's leave it there for the day. Hopefully everybody's enjoyed watching. Thank you for participating, and we will be back tomorrow morning.
Yeah, lovely. Cheers, Joe.
Bye.